Executive consultants, you're welcome. In our previous videos in regards to group accounts, we've been looking at a consolidated statement of financial position. We looked at it under IS 27, and then we also looked at it at IS 28, where we included the associate. And today we are going to look at the consolidated income statement. So a few things that we need to know, a few basics for us to remember as you're watching this video. We need to know that we are still going to do 100 by 100 line by line basis of the incomes and the expenses. And then we will also have to make adjustments. But these adjustments, some of them are going to be determined by the added information. And those adjustments are most likely to be on the sales and the cost of sales. And to a bigger extent, the profit after tax when we are attributing, like we'll be seeing later on. So let us start with the sales. When we are making sales, and how do we come up with the adjustments? If we have intra-group activities, remember the standard says that once there is intra-group activities and at the end of the financial year, that those items that were sold between the parent and the subsidiary are still in the business, then we need to less that unrealized profit. That's if the items were sold on a markup. And if they were not sold on a markup, then we still need to eliminate them still at the cost. That means we'll only less the sales. So what happens under the sales adjustment? We are simply going to less the intra-group sales that were made. And then when it comes to the cost of sales, if you remember in your notes, I'm sure you read and you saw that we are supposed to less the sales again from the cost of sales, and we have to add back the profit, which is unrealized. Why do we add it back? Is because that profit has made the profit of the associate or of the subsidiary or the parent to be huge, yet it is unrealized as regards to the standard. So we need to add it back to the cost of sales to increase our cost of sales, in that in our consolidated income statement, we have a realized or a net profit, like we'll be seeing later on. It is very also important for us to understand that we are going to do a line by line basis, not like we did over assets and liabilities only, but this time around, everything that we have on these two financial statements as presented by the IS 27, the separate financial statements, then we'll be able to know how best to work out an consolidated income statement. So we are going to open today's simple work, and we will see how we come up with one. I must put a disclaimer that the figures or the financial statements we are going to see do not belong to any of the companies that I am presenting. I have these companies to bring the reality of accounting to you, the students, and for you to appreciate the beauty of your course, because these things happen in real life. And then when it happens in real life, they simply have to be done the way they are supposed to be done, like we are going to see. So I'm going to open our question, and we can see that they have given us Facebook, and then they have given us Instagram. So by now we know that Facebook is a parent and Instagram is a subsidiary, and they are telling us for the year ended 31st December 20X, we have the two financial statements. And then after that, we can see in our added information that Facebook paid 1.5 on 31st December 20X1 for 80% Instagram ordinary share capital of 800. And then the balance of retained earnings was 600. But at least by now we know that any pre-acquisition retained earnings is going to be eliminated. Why? Because it effectively cancels out with the cost. And if you can see, we have 1.4, that is the share capital and the retained earnings, meaning Facebook bought this company at a goodwill inclusive. And then we can also be seeing that goodwill impairment at 1st January 20x5 amounted to 152,000. And then they are telling us a further impairment of 38,000 was found to be necessary at the end of the year. They are going ahead to tell us that impairments are included with the administrative expenses, meaning we need to make adjustments. And then Facebook made sales to Instagram at a selling price of 600. And if you've been paying attention, you know by now that we are going to less these sales on both the sales and then on the cost of sales during the year. And then they are telling us that not all of the goods had been sold externally by the end of the year. So it's not a crime for a parent to sell to a subsidiary as long as the parties sell to a third party all the items that they might have intertraded. And then they are telling us that the profit element included in Instagram's closing inventory was 30. And by now, you know, we need to add back this unrealized profit back to the cost of sales and all will be well. Finally, the figure of investments income in Facebook income statement comprises of the parent company's share of the subsidiary's total dividend for the year. Then they are telling us to prepare a consolidated income statement for the year ended 31st December 20x5 for the Facebook group. So we are going to open our Excel sheet and then we are simply going to have the same thing because we are combining. And like I said, we are simply going to do a line by line basis of each item that we have up there. So we will come to our sales and then we will start with the sales by 3,200. Then we add the 256 and then we'll get 5760. But remember, they told us that Facebook sold to Instagram at a selling price of 600. So we need to less that 600 from the sales. So we'll simply say then total sales of the Facebook and Instagram. Then we get our net sales as 5160. Then we come to cost of sales. We are still going to do a line by line basis of 2200 plus 1480. Then we'll get negative 3680. But remember, we made sales. And when I remember telling you in our introduction that the standard says we need to deduct the sales. But because this figure is in negative, allow me do the mathematics bit. And I'll say plus the 600 because the negative will automatically remove the 600. And then the question also went ahead to tell us that there was unrealized profit of 30,000. So we will simply come and then we say, and then we less the 30. Why am I lessing the 30 is because a negative plus a negative gives you a negative. So, and why am I putting the positive on the 600 yet we're supposed to less it is because the negative is big. And if I put a negative again, then we will not have a deduction of the sales. But in real life, or if you're using a calculator, you can set 3680 minus 600, then you add the 300. But because I'm using Excel formulas, they cannot allow me to do that. So I will simply do this and we will get our cost of sales. And if you're using your calculator, you must have gotten this value. So we'll get our gross profit, just like from the fundamentals, we are told that it is the sales less the cost of sales. And we will get our gross profit as 2,050 shillings. Then we'll come to administrative expenses. They are telling us the administrative expenses are 400, then plus the 80. But remember, they told us that impairments are included within administrative expenses. So a further impairment of 38 was included in the administrative expenses. So we are going to add the 38 as well. And if we do that, then we are going to get our administrative expenses as 518. And then we will also create space to bring in another expense that I had not catered for. And that is going to be the distribution cost. The distribution cost of 160 plus 120. So I will come and then I simply say distribution cost of 120 plus 160, and then it gives us 280. And then once that is done, then we'll still need to create, so that our work looks organized, we'll have to create profit before tax. So that we simply say it's going to equal to sum of our gross profit, and then we take away the administrative expenses and the distribution cost. So we'll get our profit before tax as 1,252 shillings. Now, this is where we make a mistake. People are going to subject the profit before tax to the corporate rate, which is 30% in Uganda as of today. Yet that's not the case. Remember, we are doing everything line by line basis. So we need to come back to the question again, and then we add the taxation of 400 plus 480. So when we do that, we get 880. So we'll get a negative 880, and then we'll get the net profit for the year as summation of these two here. Then we'll get 372. Now, why have I not brought in the investment income? I've not brought in investment income because the investment income is an internal thing. It is more of a current account in this group account. And by standard, we are not supposed to bring in the current accounts into the consolidated statement of financial position. That is why I have eliminated the investment income. So once that is done, then we need to attribute this profit for the year, which is 372, between the parent and the subsidiary. We should know that. Now, this is where we need also to pay attention. Remember, we have our NCI as 20%. So people also make a mistake when they get here. They get 20% of 372, and then they get 80% of 372. The first thing that you should do, or another work you need to do, is you need to get this 20% not on the net profit for the year, but for the question. So you will come and you get 20% of 400 shillings. So we'll say 20% of 400. Let me just put the equal sign. And then it will give us 80. So when I put the 80 here, then I will have gotten the attribution of profit that goes to the subsidiary. Now, how do we get the one for the parent? Do we get 80% of 372? No. The balancing figure should always be the share that goes to the parent. And what does that mean? It simply means we are going to say this 372 minus what we got as a subsidiary, so that we can get our attributed profit that goes to the parent as 292. And when we add the two, we can clearly see that we are getting our profit for the year, which is 372. So, and consolidated income statement is as easy and brief as you have seen. We are simply adding line by line basis, and there is no much that we need to do. But you need to keep in touch that we are doing a line by line basis, and then we have adjustments to make on the sales and the cost of sales. And then the NCI is going to help us to get the value of the subsidiary. And then the balancing figure will be the share that goes to the parent. In our next video, we'll be looking at a midway acquisition. How do we do if this subsidiary is only acquired for probably 2 months, 4 months, or 1 month? And that will be in our next video. Subscribe to this channel, share this video, share it with your friends, and please don't forget to click on the bell so that every time we put up a new video, you get notifications. Executive consultants, let us learn